It's probably testing, maybe something like you need to do when you're flying. Maybe it's a test, like something you need to do when you're flying. So if you land, it's at least water, not a tarmac. Make sure you're doing it correctly.
Jeez. All right, you ready?
Well, Lisa,
Did you hear screaming on the lake like ah?
No, maybe I'll bring it up during the podcast. Your door situation.
Oh my God, Keith.
Your door fell off now?
No, go ahead. We'll get this in
No,
file.
I just
All right,
forgot to
let's
close
get
it.
this show on the road, and then
I don't
we'll
even
hear
know
about
if I
this.
should talk about this.
All right, welcome back. Episode 18.
Oh,
Wow.
we're just knocking them out.
Yeah, going fast. It's like we do more than one a week.
Right?
All right. Well, anyways, we've got Lisa back with us.
I don't know how to do the I don't have the button. I was going to cheer.
Applause.
Keith
There it
is
is.
like, no.
I got it last week. We're good.
I gave it to him last week.
Oh, wow. Wow. Finally, he got his applause.
I'm surprised he didn't retire right
Yeah.
then and there. So walk off.
But I feel like you don't need it now because you're here every week.
That's
so,
true.
Yeah.
We're good.
Everybody knows you at this point.
You're a staple, Keith.
Infamous.
Yeah.
So, Jeremy, I wanted to ask you. So, I've been gone the last couple of days, and I did actually watch a basketball game.
Okay.
So we took a little break out of our little weekend getaway to watch the basketball game, and it was pretty good.
Yeah.
So I just wanted your thoughts on Steph, and do you think Steph and LeBron team up after this?
No, it's too hard. I'd love it because I think it would be a blast to see those two end their careers together. It was a fitting way, they're kind of talking about this being kind of the end of an era with the Steph, LeBron, KD group. And I can't think of a better way to go. LeBron played really well. And then Steph at the end. Steph had a horrible series up until the last two games.
Last 2 minutes
Yeah.
of that gold medal game were
Craziest
insane.
thing. Right. Yeah. And it was so fun. So glad we got it. Glad we won. Girls won too.
Yep.
That was a
even-
nail biter. I
Yeah,
didn't see
was
that
crazy.
one coming,
Yeah.
but the French team were just beating them up the whole game. I mean, that was the refs just swallowed the whistles and said, any rules apply at this point.
I heard
right
they
now.
did that for men's and women's
A
basketball.
little
for
bit,
the,
yeah.
For the entire
The men's game not quite as much. The girls' game was just, it was prison rules. I mean, it was like they were just going.
Yeah, no, I actually
Yeah.
watched the second half. It was entertaining.
Yeah, it was. It was very good. So both of them ended. USA beating France. Ha ha ha. Love it. And yeah, the Steph ending was phenomenal.
Or the other rumor that I've been seeing lately is KD to Minnesota.
Yeah, no. There's a yeah. The ability, it's just like the markets to a certain extent, right? The ability to send out things that are just rando takes much longer to refute those things than it does actually to send them out. So there's 1,000 rumors and maybe one of them ever happened, and that one's not happening. We have no money.
Minnesota fans getting a little too excited. My other rumor, this is my hot button for
Ooh.
this week. My other rumor is recession on the horizon. I'm hearing people talking about it. More, not necessarily like advisors and clients, but more just like Wall Street type
Sure.
analysts saying recession may be in the cards next year
Mhm.
or maybe later this year. And part of that discussion has been spurred because there's different charts that JP Morgan, Goldman Sachs put out that show chances of recessions. We see them all the time and they seem to go away when we're in good times, and all of a sudden they pop back up because people start to feed on that. So the JP Morgan and the Goldman are both starting to creep higher, more towards that like 40-50% chance of recession at this point. So I want to get your guys' thoughts. Do you guys think we're going to recession?
Oh, yeah, I'll start. I don't think we're going to a recession, but I do think the probability has increased, and which is no surprise. If you go back, a year and a half ago, everybody said, 2023,
100%.
100% recession, no recession. And we certainly didn't see it. The data didn't show it. So, and now we are slowing with unemployment, at 4.3%. Consumers are getting a little pinched. I think the call for a recession actually makes a little more sense, but I still think it's a relatively low probability. I think the numbers that you're talking about are around 40%. Just to put that in perspective, I think historically every year, even in good times, it's around 15, 20%. So we are off that 15 to 20%, but I certainly don't see one this year, but we are slowing. So it's something we have to keep an eye on for. And it's, again, recessions do happen, right? I mean, they happen should be around about every 7 years, roughly. It's kind of, so it's, you remember they're calling for them in 2023. Now we're almost into 2024. So it's been a few years since the last one. So it's at some point in time, you are getting closer to one, just by stats.
Do you think the COVID one did people consider that a true recession? Because I know we were in a recession because we shut the economy down.
Yeah.
But it wasn't a business cycle recession.
I don't think it matters. I mean, at the end of the
no, I don't either. I think it was a
at the end of the
recession.
day, you contract, you expand, and then you contract again at some point. And it's always, there's always probably some level of catalyst. I mean, it would never go down if there wasn't some level of catalyst, whether that's expensive prices like inflation right now or an exogenous event like COVID, right? I mean, there's something that usually ends up causing us to contract in the economy. We never know when or what it will be, but we know something happened. So I don't see why that would get an excuse. I mean, the housing market fell apart in 2008. Would that be I mean, that's a random event too, but it caused a pretty nasty recession. So
that's fair.
Those are the kinds of things that, from this is where I'd take a step back on this. I absolutely agree with you, Gangl. I don't think we're going into recession in 24, but it's something we should probably watch out for a little bit more. We're going to be cutting rates. We've been talking about economic trends slowing for a while. Right? Is that don't expect this to accelerate going forward. Expect it probably to slow, but probably not contract at this point right now. But I always say that, we just got over the fear of high prices, right? Is that now, and I always say this, is that it's not like market fears ever go away. They just pivot to the next thing. Yep. And now the next thing was, we had these ultra high prices. We're worried about this. That's getting under control. Well, now we're talking about a recession. So it just never goes away. I think these fears, especially in this year, are somewhat unfounded. But as you said, Gangl, I mean, it's something we should pay attention to because a slowing economy could slow into contraction. Absolutely. It could happen. We're certainly not seeing that level of contraction in the data right now.
No, and I mean, to your point, all recessions look a little bit different, right? And I think the reason you asked about 2020, because that was such a short one. I think the average length of a recession is 17 months. So that was so painful
was 2 months
and short, right? 2 months versus, again, it's way different than 08, 09 timeframe with the great financial crisis. That was a long one, and you could see it coming, and it was really dragged out, which I don't see anything like that coming in the next, certainly this year, and even the beginning of next year. I mean, that was bad. The other thing about when they actually technically declare a recession, you've been in a recession for quite a while, right? So I don't know when it gets actually, if they say we're in a recession, usually the stocks are actually starting to rebound
the other
better.
way.
So
we're already
just
going
something
the
to be
other way.
aware of there.
Lisa?
I read a note the other day that there is like 40% probability that we are in a recession right now.
Right now.
And that was very interesting to me to read it. It was out of the blue. And I'm like,
you read in bearmarketnews.com?
And I'm like, what? Right now? It was very interesting. But I think after the market sell-off last week after the job report, and like Jeremy used to say, nothing lives in a bubble.
Yeah.
And I think the economy is made up of a lot of indicators that change in waiting. But I think there's a lot of nervousness in the market, what we see. But we also want lower inflation, and we also want interest rates to come down. And that cannot happen with some form of slowdown.
Yeah.
I mean, the Fed needs
basically what the
something,
Fed was trying to do.
So it's like, okay, we kind of want that, but we don't want the other thing.
Yeah,
it's
we don't
like
want it to go too far.
Yeah, right. So it something has to give.
Well, and the other thing is like and we saw this back in 2022, is if you want to find data points that show that we're in contraction, you can find them.
Oh, yeah.
Sure.
But you can also take the other side and show that we're in this booming economy. You can find those data points as well. So it just depends on like what that person in that note is looking at. Because if you're looking at like manufacturing information, like PMIs have been negative for, what is it, like 24 consecutive months or something at this point. So 2 years.
Yeah.
Right. So like that's contraction. That's your manufacturing is down, which is used to be a big part of the economy. Maybe not as significant with services today, but I think depending on where you look, you can certainly find the data that would show that we're in contraction right now.
I keep thinking about Lisa because it's a weird call, right? There's a less than 50% probability that we're in a recession right now.
Yeah.
It's like, dude, either call it we are or we're not.
Right.
It's like, don't put a coin flip on the fact that if you're going to make that call, make it.
Yeah.
Whether you want to say in the next 12 months, that's where you put a probability on. But to saying we're maybe in one right now is like the weirdest call I've heard.
Well, I think that's the easy way out, right? Because you call it as long, and at some point in
You'll be
time,
right.
you
Some point
probably
you'll be
will
right,
be right.
yeah.
And then I've said it all the time.
I had this.
Yeah, right. It's like, okay,
I'm just early.
just stick with it, and then you will be right at some point.
Just
in
like
time.
stocks, being early and being wrong usually aren't that much different.
But what's been driving like the Goldman Sachs and JP Morgan models to show recession has been interest rates. And you've seen a significant drop in interest rates because the Fed rose at the fastest pace, and all of a sudden we are expecting a significant drop still, right, with the Fed expectations. So my question to you guys is, are these economic indicators broken after COVID? Like did COVID and how significantly everything moved during COVID and post-COVID, did that break all of these economic models and indicators?
I don't think it broke them. It certainly probably maybe skewed them a little bit. All the money that got thrown into the economy, I think, made it a little bit higher for longer, which caused rates to go up, caused inflation to go to 9%. Now it's just going to take time to go back down. We use the word normalization, right? Talk about, I think, so as interest rates do come down, I think that's normal, right? I don't expect them to be at zero where they were the previous decade either, though. So I think that was abnormal. So it's like the rate we're at now, the 10-year treasury yields a little bit below 4%. It's at 3.8.
3.86.
That's, in my mind, that's not that far from where a normal range would be. So if the Fed cuts, or the Fed funds rate's at 5.25, gets, cuts it back down towards that rate, I think that's normal. So that's my take on it.
Yeah. I think it just proves that nothing is perfect about calling these things because it's so complex. There's so many different inputs and so many different things can happen. And then let's not even talk about the exogenous events that can happen out of the blue, right? So, if you're looking for a perfect indicator, it doesn't exist. Whether it's at least a signal to pay attention to things, I don't think that's broken. Like I would still, the next go around, even if this one didn't work, the next go around, I'd probably look at these indicators and saying, are things changing and paying attention to them, understanding that nothing is perfect and telling us what the economy is going to do. It's just too big and convoluted.
So even though like 2022, JP Morgan's recession model showed, what was it, like a 65 or 70% chance of recession, you don't think that model is broken itself? You just think that it's a reason to look at what's happening.
It's exactly right. Yeah. I mean, even that, they
Still
never got
perfect.
to 100.
Yeah, never.
And from the other side of that, so one of the things that I looked at when I looked at the JP Morgan recession monitor was at above 65, there had never been a miss before, that it always had predicted a recession in the past. Well, it missed this time. And that's probabilities right there, is that you don't have enough statistical events, right? There's just not that many recessions. So to say I'm going to have a perfect indicator all the time because it called the last 4 or 5 does not mean it'll call the next 4 or 5 very well. I just think you have to realize that none of these things are perfect, and trying to forecast them is going to be difficult, but it's something you can at least monitor to say, okay, is enough things changing that I should probably think about adjusting as a result of more maybe clouds coming in the horizon.
Yeah, Lisa, didn't you write on the 2-year, 10-year being inverted, right, a while ago, and how that now historically has gone past? You want to talk about that?
I read like the market reflection a few weeks ago about the yield curve inversion, like that it's now inverted for the longest period in history without a recession actually showing up. And it was said to be very reliable indicator of a recession in the past. Like you said, okay, how many recessions were there? Was it like it just happened to be at the same time, or was it really a forecasting? But it was said to be very.
And what I find interesting now is it's becoming uninverted, right? I mean, the 2-year, 10-year, actually the other day when the markets kind of got a little crazy on that Monday, it was actually uninverted for the first time in probably over 2 years. Now I think we're still at about 8-10 basis points.
Yeah,
inverted.
it's less inverted now.
Yeah, but at some point in time we're going to come out of it, right? And that's we're starting to normalize again, going back to that.
So
normal.
so what's the rule of thumb for the yield conversion? A recession follows 6 to 18
Yeah.
months.
Yeah,
So
I think they extended
It's
that
a
to
long-
24
yeah,
Are we
now,
just
didn't
gonna?
they?
That's what I was
long
just gonna say.
period.
Just
Are we
keep
changing
rolling
that
it
to
Keep rolling it out.
6 to 36 months anywhere? 6
And now
months
it's
and
like
3 years?
around like 26, 27 month already, 26.
Yeah, and so at some point in time, if recessions
Yeah.
every 7 years, you're starting to stretch out to 3 years.
Yeah.
It's like, what's the point of it?
Exactly.
I mean,
Yeah.
it's still something to Jeremy's point.
To
All these
look
different
at,
data
yeah.
points, you want to look at them. They're
Mhm.
certainly I think you had talked about the SOM rule. I mean,
I don't know if we really want to get into that,
yeah,
but the SOM rule basically is the 3-month moving average of the unemployment rate. So every 3 months you get a
Yep.
new number, taking the last 3 months in an average. From the lowest point to the highest point, or from the lowest point, if it increases, that 3-month moving average increases by 0.5%, it's an indicator for a recession.
and it's been
And-
100% right so
and
far.
so Claudia SOM created back in 2019. She basically back tested it all the way. I don't know how far back, but I think she went back to like 1920s for the back test, and every single time it was right on the cusp of a recession when it hit that trigger point. And we hit that trigger point last month with the 4.3% inflation report. But even she came out and said
That it doesn't.
that it's not perfect. It's a very simple thing,
Mhm.
not to take too much stock into it. And this unemployment rate that we saw last month was very different in a composition than what we normally see ahead of a recession. We had more people entering the labor force rather than people getting laid off.
Yeah.
So there's a lot of things I think that you can find or spot that would tell you that we're going into a recession.
Back
but-
testing is cool, man. Every investment philosophy that uses back testing is phenomenal in the back
Yeah.
test. Doesn't always work going
No.
forward.
So
But I do respect her because I listened to her and she said, hey, this is a triggering event before, or at least it's been shown to be one.
Yeah.
Like, but it's not perfect,
even
and we
she
don't know if it's
doesn't
not.
she doesn't get too serious about her
Something to
own-
pay
yeah,
attention to,
yeah.
which is absolutely fine. That's fine. I have
Yeah.
no problem with that.
So anyways, so I think consensus here is that we're not going into recession.
Not in
Not
2024.
this year. Not this year,
just
right?
Not in
economic-
2024.
Not in 2024. Okay.
Would we want to give a probability to that?
No.
40%. Some say 40% that we're in a recession right now.
Jeremy's at
So how many
99%.
Yeah.
99% no.
I'm 99% probable that I don't want to give a probability on it.
All right.
Uh,
Moving on. So this kind of my nerding out topic kind of goes along with that whole recession because the U.S. economy is 70% consumer, and we pay a lot of attention to consumer stocks or consumer companies, right? And we're starting to get some of those reports. And so, we had Home Depot report yesterday, wasn't the greatest from the consumer side. And so what does Home Depot, I know it's more of that home improvement store, but does Home Depot really give you any insight into consumers? Lisa, I'll start with you.
I think so, yeah. Because it's kind of an indicator for the housing activity, because more housing activity, more home improvements, more DIY, and that dialed back. So kind of they slashed their forecast, which is kind of makes sense because in coming in the year we so the consensus was that we have interest rates cuts very much earlier. That would have spurred their demand for that. That kind of is a little further out the year now, which makes sense that this takes time to really evolve. And the consumer is a little bit more wary where to put the money, especially the low-end consumer, and where do you dial back when you have to think of where you put your money, probably on things like that. So I think it somehow makes sense that it's now just a little bit later and that they kind of dialed back on their forecast. Yeah.
Does a Home Depot or Lowe's have much implication for the market itself? Because we saw Home Depot and the market didn't really seem to take much stock out of it.
No, I think it's a little bit of a reflection of where interest rates are, to Lisa's point, and it's large projects for home remodeling are getting pushed to the right, other than Jeremy doing stuff at home, I guess.
Oh
But,
man, it's always
hate to
holes in my
bring that
house.
one
Did
in.
you
But
get your hole filled in yet?
No,
Oh, jeez.
the deck is being built on top of the hole, but the hole is still there.
But you doing a deck, Jeremy? Did I? No.
Like me building it?
Yeah?
No.
Oh, okay.
No, I believe in an outsourced economy,
Okay,
Lisa.
yeah, me too, Jeremy. We're on the same page
Specialization of
here.
labor.
Jeremy's trying to create jobs.
Yes, exactly. That's what I'm here to do.
so I think that's, back to the Home Depot thing. I think basically pushing all these large projects to the right. So if you were kind of a little bit stretched, a little bit worried about your job, then you're going to say, I'm going to wait on this big project. And I think it's a function of interest rates. I think as interest rates come down, then that stock works. It's a recent ad for both, I think, Jeremy and I in the last not too long ago for our portfolios, due to the fact that we think this, interest rates will come down, the consumer will still spend, and when you feel a little more comfortable about that extra money in your wallet, or you can go get a HELOC, borrow when it's a little bit cheaper, it makes a little more financial sense to invest in your house, and people love investing in their house. So
yeah,
I think it's part of it does reflect on what's going on in the economy, but not just to where some other consumer names maybe is more.
Yeah. So that was going to be my next point is we have Walmart tomorrow, or as of recording tomorrow.
Right.
Jeremy, do you think Walmart has, from a consumer standpoint, it has the biggest impact on the market?
One of the biggest. You also get a sense of the trade down effect, right? Is that they'll talk about, because they're just everywhere, right? And so you get a sense of what people are buying, what people are not buying, what people are adjusting to. I like to use Walmart and Target together because Walmart is much more grocery oriented and a little bit more like the stuff I need I get at Walmart. Target is stuff I need I get there, but I also the kind of fun stuff, especially my wife's fun stuff.
Guilty.
Yeah, exactly. There it is. So I like to use those together and just kind of say what's Walmart talking about versus what's Target talking about, because it gives you a sense of kind of people's desire and what they're spending on what they need to spend on and also what they want to spend on. And they can be very different at different points in time. So using those together, as you said, Gangl, about Home Depot, I look at that much more, especially right now, because we're having such a change in interest rate environment, that's a little bit more, that's what's kind of focused there.
That's the driver.
It's
there.
less of just general consumer activity, but Walmart and Target for sure.
Yep. Yeah, especially in this, I think Walmart, 60% of their sales are food.
Yep.
Well, I think Target's more like 20%. So it's definitely, to Jeremy's point, of more the I want versus I need. And so obviously the stocks have done differently for the last 6 months as well. Walmart's been a lot better. Target hasn't been. So we'll see. I mean, Target's pricing in a lot of bad news. So we'll see what they report here next week or two.
Yeah.
I think those two are also a little bit of an indicator about what we see now with the higher end consumer is still spending, or the lower end consumer, like between Target and Walmart, because Walmart is more catering to the lower end consumer, and Target more to the want and more to the higher end.
Yeah.
So I think that could also is a good, or an indicator at least, what consumer is spending where.
Sure.
Well, and to your point, Keith, about Walmart and Target performing very differently, the expectations for Walmart's earnings have crept up throughout starting last year. They've just constantly crept higher, whereas Targets have been the exact opposite.
Yep.
So I guess to point out what the consumer's doing, they're trying to not spend on the I wants and spend on the I needs, which is probably more of the Walmart grocer type scenario.
Yeah.
And I think like Walmart and Costco done a good job of holding back that passing on inflation to the consumer. So I think that's helped Walmart and Costco stock, where I think Target had too much inventory. This going back like
Target's harder.
It's harder to dial that back, right?
Yeah.
When you order all this inventory, it takes time to get there, and it's a higher price point. It just takes you time to get through the system. I'm hoping they are getting through the system.
Like the $150 blenders, right?
Yep.
How many of those are you going to sell when consumers are pulling back?
Yeah, exactly right.
That's exactly
the other thing was Walmart went through a big spend cycle, a couple of years ago. That's kind of fading out now as they were building Walmart Plus and they were building all their kind of e-commerce type of solutions. There's a little less spend there now. I think that's helping the EPS side, but I think the bigger thing is what Gangl is talking about is, especially with Target. Yeah, you're just, I don't need that right now. I can maybe wait on that. And they had a lot of stuff that you just can't pass that price through.
Yeah. So the other thing is, there's other companies that we typically watch for consumers, whether it's high end or low end. So, some of the ones that I was thinking of, like TJ Maxx, Ross Stores, Dollar General, I think gives you a good indication of some of the lower end consumers. And then, from the higher end, you can look at like the Best Buys, you can look at Ulta, Lululemon. Do those have any when you're comparing these companies versus like a Walmart, do you guys prefer a higher end, lower end? In what type of economy would you prefer those?
Well, it's funny. I'll start with just TJ Maxx and Ross because, we've been talking about a lot that the lower end consumer seems to be where probably the most stress is right now. But yet these things work phenomenally, and it's because of the trade down effect. That's what you have to understand about these, is that people will shop there. They still want their branded materials, their Nikes, their Adidas, and all that stuff, but they'll buy it there instead of going to a high-end store where they're going to pay more. So there's an effect from them that even if their consumer base that we're maybe talking about isn't quite as good, usually these stocks end up working better, which is a little bit of an interesting dichotomy. From our side, though, that I pay a lot of attention to those for the trade down effect, not as much about what is the consumer actually doing. I pay more attention to those. And then it's just after that, it's kind of a conglomeration of all of them, right? Is that I'm going to try to pay attention to transcripts and just see what they're saying, especially when somebody comes out with a very big surprise. That's the one I'll pay most attention to, is like, does this relate to another company or just a broad set of the market in general? Or is this just a problem at this company? That's what I'm going to pay a lot of attention to across the consumer landscape.
Yeah, I mean, Lululemon's one that hasn't performed. It's been actually a really bad stock this year, and obviously they've got competition coming. I mean, Tyler, you can probably talk to about it since you're most familiar with Lululemon having.
Well, I wanted to ask you about that one because we talk about higher end consumers are still like there's a bifurcation between lower end consumers and high end consumers. High end consumers seem to be doing just fine, but yet like a Lululemon stock who caters to those high end consumers haven't done very well, right? So just.
Yeah, they haven't done well. Part of its execution, part of its brand, part of its competition. There's a few different things going on, I think, with Lululemon. I mean, they just had a new product come out. They had to pull it back, and there's things like that, which doesn't help the confidence of the stock. You've gone from a high multiple stock to now a very reasonable market multiple on the stock. So it's now I think the expectations are very, very low on this. And I think they're not a high end either. I think they're that mid to high aspirational.
Sure.
You know, and I think those, to Jeremy's, I think they are trading down or holding back, and they've been a great stock for a long time. And athleisure, maybe that category as a whole, starting to slow. But there's a few different things that are going on there.
Yeah, so that's, people have to be cautious about just relaying to, oh, they cater to the high end, they cater to the low end, and I'm going to buy this and sell this or whatever, because competition is a huge factor in these things, and just sentiment and what people want to buy and where they want to buy it and who they want to buy it from. And is there another brand that's starting to take it? Nike's been awful, right? For the better part of a year and a half. And that's athleisure, and that stuff is people have been buying other things. I think that's the biggest story with Nike, is that people are just buying other things. China was a problem for them, but also I think just competition is a problem for them too. So you can't just use, especially in this sector, you have to be very careful about just making a macro call on these companies, because you can get railroaded as a result of that.
Starbucks is another one I'd put in.
Starbucks is another one.
The perfect example. And you said
the new CEO.
I was saying we had a 20% bump, which Jeremy and I like to see yesterday, because lovely. they got a new CEO from Chipotle. Yeah. That CEO has been a rock star, so everybody thinks he'll help turn around Starbucks. Again, that's the same thing that Jeremy just talked about, the trade down, competition, China. Those are all issues, but it's amazing one person coming in maybe can change it. And I don't think that's going to change overnight by any means, but at least directionally, I think they'll probably have a better vision going forward that could get...
The CEO's known to have a pretty amazing vision for where the companies go.
Yeah, and they just stumbled a lot. And I think if he can just stop them from stumbling a lot, I think they'll be okay. They still have pricing power like nobody else's business.
Yeah,
man.
I hate it.
Tyler, normally when we come up here, you usually have your Starbucks cup, and I guess this morning you weren't feeling it. Oh, that's why. It wasn't like you're cutting it out of your budget. It was more of a time issue.
Steph and I always talk about how we need to cut it out of our budget, and then it's like, nah.
No.
Yeah, I drive by it. I'm like, I have to.
Yeah, not me. I just keep driving.
All right. Wrapping this thing up. NFL is officially back. Did anybody watch the first preseason games?
Hey, what?
Hate preseason.
I hate
your first look at JJ.
Hey, I actually went to the game.
You did?
Yeah, I don't know if you guys knew that. I went to the game. I hate preseason normally, but my brother-in-law had tickets in a suite, so so went to the game.
He was living that high life, yeah.
And surprisingly, my son and wife went as well, and they're like, "Oh, how many? A lot of people." I'm like, "No, it's a preseason game." We went to the game, and it was fairly, I'd say 85% full. Traffic was terrible. Parking was bad. It was just
how it should be.
By the time you get to the second or third preseason game, that's when it starts to not be full because
Oh, for sure. And I think
You-
there's only
you got
3
third
this
stringers
year. I
playing.
think this is the only home game. Part of why it's full. You had a couple new players like that JJ McCarthy, which ended up getting hurt. You know, he tore his meniscus, I hear, so terrible. But the game was actually entertaining. So it was the crowd was into it. I mean, it was actually surprisingly had a good time.
Lisa, I had a question for you on this.
I don't know if I can shed a lot of
Yeah.
light to this one.
on NFL.
Do
Come on, Lisa.
Europeans like football or American football?
I was gonna say they like
Sorry,
football, just not
American
ours.
football.
Round one.
So the thing is, Europeans are more like soccer. That's the biggest thing. Formula One, which I hated as a child because I had to listen to it every Sunday when
Oh,
my
boy.
grandparents.
Now you're hurting Tyler's
Oh
feelings.
my god, it was
We
bad.
are-
Tyler's like,
we-
I'm
we
moving to
argue
Europe
about this.
tomorrow.
Yeah, right. So it's a big thing. And the culture around there, and in winter ski jumping, the downhill ski thing, that is a huge thing, especially for Austrians.
Sure.
And
That's cool.
I think football, no one really cares about it, American football, except the Super Bowl.
Mm.
Because it's normally in the middle of the night in Europe
Oh,
when
I
it kind of
suppose.
takes place. And it's on a Sunday. So a lot of people take off on Monday from work.
Oh,
And there are
interesting.
huge public viewing sites where they have like parties and watch the Super Bowl together. So it's interesting.
They don't know any
because
players.
they don't know
even know their team names,
anything.
but it's
They
a
don't know
party.
anything. But it's interesting because no one cares the whole season. No one knows anything about it except the Super Bowl. That's for whatever reason, a huge thing in Europe.
I think that's Americans with the World Cup up until
Yeah, that's
recently.
fair.
I think
Yeah.
the World Cup for Americans,
Yeah.
like, get together and have a ball,
Yeah.
have no idea what's
No
going
idea what's
on,
going on.
Commercials.
but it's fun.
Yeah, yeah. So I think that's the only connection I have with American football when I still was in Austria. Yeah.
You gonna join any drafts?
What?
Fantasy football, he said.
Fantasy football.
I heard about that, but I
Lisa's like, I
Right
don't really
now.
want to join the military. I'm good here.
Yeah.
What?
I imagine you two have a couple of leagues coming up. I know Jeremy's probably got 2 or 3.
No, I backtracked into just one, man. I just, I don't know.
I'm actually in one. I was in it a long time ago. Took it. That was when paper books. Jeremy and I probably the same time as then. It was like it was a lot of work. Then I quit it for probably 15 years, and now the last couple of years I've been in one. It's nice and easy. It's easy. It's on your phone. It's just like I can see why people get addicted to all these leagues
fun.
and in-game betting and stuff like that. It's definitely makes games more interesting than just sitting there watching. And I love football anyway. That's a sport. That's my sport to watch. But this even adds another layer of excitement to it.
Uh-oh.
I-
I hear Gangl's daily fantasy is about to start.
No, I'm not doing that. No, I'm not doing
Like,
that.
you want to
but-
make it fun, right?
We have our draft coming up too, but my neighbor, the reason I wanted to ask is my neighbor, I think last year was in 4 or 5 leagues.
That's too many.
And they've got
Yeah,
like the
that's
big draft. They do it like they draft with paper still. So they've got like the draft boards. It's
Oh, wow.
and they're doing
That's a
bonf-
production. Yeah, that's
it's-
good.
I was like, you guys do you. But last question for you guys is who do you think is going to win the Super Bowl? Early season guess.
I would have to go 49ers.
You stole mine, so
Yeah,
now I
is
got
that
to
who
try
you're-
something
okay.
different. Yeah.
Just something different. I mean, I think they got a team built well on offense and defense, and they can do it.
Here, I'll give you one.
Not the Vikings.
No.
Jeez.
The Chargers.
Oh, I
What?
was going to say that.
Come on.
I don't think it's going to happen. You stole mine, so I'm giving you another
You
one.
got
But yeah,
Harbaugh in there.
you put Harbaugh in
Really?
with that quarterback, it could be a little different
Wow.
story this day.
Fine.
What's yours,
Then I'll
Tyler?
go. I'm gonna go with the Bills. I think they can.
What?
I think they
Getting
can.
over
They're fun
that
to
hump,
watch.
huh?
Yeah. Lisa, do you have? Yeah, you can just take the Vikings if you like.
Yeah, I would just
Don't
wanted
take
to
the
say,
Packers. It
I
will
am-
not go well.
I know. I am very well
Our
aware
listeners
of
may
that
turn you out
rivalry.
in the wheelhouse.
But I'm like, they were not bad last year, right?
Vikings.
I mean,
we weren't
Fine.
good.
they're very good. I
Fine.
mean, they're not. Yeah, that's about like Minnesota sports.
Yep.
What I learned, they kind of gives you hope.
Yeah,
They give
just
you
enough hope to
kinda,
kill ya.
Just enough hope, then kind of.
Yeah.
But I'm a little bit more patriotic here. I give it. To them.
Nice.
Nice,
I love it.
there we
I don't
go.
know, They
Should've
have
ended
to,
on
they
that
have
note.
to have one vote.
All right. Well, thanks for being on, guys.
Always.
And that was episode 18. And like and subscribe. Pickers Market Podcast. We'll see you guys next week.
Cool.
That's fine.
They're on
34.
wait for a minute.